Is Apple stock currently massively overvalued? In this video, we're going to be trying to find out exactly that. So according to my system, Apple is massively overvalued, which if you want to see the actual figures for, please do stick around. However, Apple is a massive company. With it being in massive ETFs, it's always going to have buying pressure. So it's a bit of a sticky situation. If you do have time to stick around, let's get into this video. So who are Apple? If you don't know, then you've been living under a rock, but here is the core business fundamentals. They are a massive tech manufacturer selling products such as the iPhone, the Mac and iPad, services such as Apple Care, Apple TV, and other Apple Cloud services. They also have wearables such as the Apple Watch and AirPods and have recently tried to get into the AR world using the Apple Vision Pro, with the recent growth drivers being that Apple Vision Pro as AI integration into technology has recently had a massive surge for their stock price. Despite this, Apple have had huge issues with the Apple Vision Pro, as when it launched in early 2025, it was estimated to sell around 3 million units in the first year. However, these targets were gradually reduced to approximately 900,000 units, which is way lower. Despite these challenging sales, Apple Vision Pro received praise for its technological advancements. Reviewers have highlighted superior display quality, sound, and gesture recognition to competitors. However, there were concerns raised about the high price, the comfort during extended use, and limited battery life, which are all very important when it is an AR, as it is very different to VR. AR is essentially meant to be used in day-to-day life. VR is mainly used for like when you're at home. So it just seemed like the technology was not there for Apple Vision Pro and it had a negative impact on their market. However, it is still a very big asset for Apple, as they are still trying to develop this further and further as technology increases. So what is some of the recent news surrounding Apple stock that might have affected the price? With them closing at $251.04 on December 16th, they had an all-time high. JP Morgan analysts attributed this surge to anticipated boost in iPhone sales driven by AI integration. Furthermore, there is a report indicating that Apple is working on a large foldable iPad, potentially launching in 2025. This device may unfold to the size of 2 iPad Pros combined, which is pretty big. This is aimed at enhancing Apple's product lineup and diversifying revenue streams beyond just the iPhone. The iPhone being, of course, their largest revenue stream currently and what you might even potentially be watching this video on. Apple is among 5 stocks, including Meta and the Taiwanese semiconductor manufacturing company, in nearby zones, suggesting potential bullish gains in the near future. The company has strong technical ratings and significant accumulation by mutual funds, highlighting its robust market position. So with that being said, it sounds all positive for Apple in the recent news. Let's see what my system says about this stock. A bit of a disclaimer, not disclaimer, but a spoiler. It's not particularly great towards the end of the system. So starting off with a liquidity rate for Apple, this shows total liquid cash to debt. In the last quarter, Apple reported a liquidity ratio of 6.4, this being really positive. And again, for the last 5 quarters, they have been consistently above 1, which means for every dollar of debt they have at least $1 of liquid cash to pay this back, which is very important in the fundamentals for running a large company such as Apple, as you want to be able to pay your debt down in liquid cash. Trendlines do expect this to increase. However, I do think we're going to see a bit of a steady range for Apple in the next few quarters. Now moving on to retention rate, this shows the amount of money retained within Apple. Here we can see a retention rate of the last quarter of 22.6, which is actually incredible. With previous quarters being around 46%, Apple has no issue here with retention, and this is what you do expect for a company the size of Apple, as it has had a long time to get to this retention. Typically, for new and developing companies, you want to see them getting around 10% retention, and later stage companies around 15%. So Apple being at 22 and higher is actually really positive. But I think I saw something saying that they make an iPhone for like $16 or something. I can't remember. This was a while ago that I saw this, and then they sold them at like $1,000. So the retention should be good. Now looking at free cash flow, again, really positive. It is very steady with the anomaly of this quarter. Where's my mouse? With this quarter here. So nothing to worry about here. Let's move on to the 365-day exponential chart. So this looks really positive for Apple, as we can see them going in opposite directions with a lot of buying pressure, and the the volume is going down. Often when you see these going in separate directions, it is a positive indicator for the stock. With us being just above the exponential trend line at the moment. Again, very bullish. However, personally, I do think we're going to see a bit of a steady growth from here, a bit of sideways action just to meet back up with that trend line. However, that could be wrong. I just don't see there being too much more growth in the remainder of this year and maybe early of next year. A very similar story on the 91-day exponential chart. Again, I do think we're going to see the sideways action here just to meet back up with this trend line, but it's a very similar story on the shorter scale here. We can see the different directions here on volume and the price. So again, very positive. So now looking at some of the figures, we've got a P/E ratio of 41.36, a 52-week high of $253, a low of 164, this being a difference of 89. The current price is 253, so we are barely just below the 52-week high. Can we push back up to the highest? I say we, I currently don't own any Apple stock. At the bottom here, we can see that the average volume to the current volume, this will change by the time you're watching this video, but we are currently down on the average volume, which shows a positive sign of growth for Apple, or at least sideways action. It could go either way. So this is where things start getting a bit weird for Apple. Looking at the intrinsic value here on a revised and original Graham's formula, we can see that we are priced at a sell. On the left, we can see an intrinsic value of $178 with a margin of safety on both of 75%. We can see an acceptable buy price of 133, and with the current price being at 253, this is not a good time to be buying in. This takes into account the earnings per share, the growth rate, and the AAA bond, of course. This growth rate has been predicted at a 12.43% growth rate over the next few years. However, this is a prediction and they often are a bit bearish, so let's change these figures and see what happens. So when we move the growth rate up to 20% growth and the earnings per share to $8 per share, we can see it pulls out at a buy. However, the acceptable buy price is $256 and we are currently at 253, so there's not much difference there, and that is with the margin of safety included. The actual intrinsic value is $341 per share. So if they do actually manage to get more growth in the next quarter, then it could definitely be still a very strong buy. However, looking on the revised chart on the right here, we can see that it is still saying sell. This is a harsher and more bearish formula, however. With the intrinsic value being priced at $190 and the current price being way above this, with the margin of safety included, we get an acceptable buy price of $142. So again, this is a bit of a hard one to actually place, as with Apple being in many ETFs, there is still massive room for growth within the stock, as people will just be buying into the stock consistently despite it being overvalued. Speaking of overvalued, when we look at the Peter Lynch value with an earnings per share of 20, which is obviously my own input, it's not what they are predicted to get, we can still see a result of 0.49, meaning they are heavily overvalued. This taking into account the dividend yield, the earnings per share, and the P ratio. If we do change this back down to the actual earnings per share growth, then it's just so much worse. So it's pretty difficult to place. According to my system, this stock is heavily overvalued despite the prospect of future growth consistently throughout the rest of the system, with all the trend lines indicating more growth within the company. It is still priced at being massively overvalued, but that is enough about my system. Let's see what the actual analysts are saying about Apple. Is it a good time to buy in their opinion? So the analysts are projecting a high of around $300 and a low of around $210. My personal opinion is this sideways action is going to happen in the next 90 days and we are going to see a bit more growth along the trend line after that. So I do still think Apple is a stable investment despite it being heavily overvalued. This just being due to the fact that people will always just buy into Apple, especially through the S&P or the NASDAQ. And based off of 47 analysts, they are projecting this at a buy. Furthermore, they are saying the target price for 2025 is just below where it is now at around 240-ish, with a low being about 190 and a high being at 300. So that is it for this video. I want to give my personal opinion, is which I've said throughout this video, which is it is still a good buy. However, there is definitely better stocks. If you're looking for a stock with massive free cash flow and a lot of what is the word I'm looking for, stability, the companies such as like Google offer more returns at the moment, in my opinion, with them starting up different streams of revenue. I just feel as if innovation within Apple is a bit dead now. There's not much in which they can do. The iPhone's been the same for the last, like 6 years. The iPad is just an iPad. Vision Pro is not where it needs to be. So unless they come out with something completely different, I do struggle to see their revenue massively increasing to get back to fairly valued territory. However, with the state of Apple, I don't think it actually matters how overvalued they are. For me personally, it definitely does. I won't be buying into Apple stock, as there is definitely better stocks to be buying into, but that's just my opinion. And again, I'm not a financial advisor. This is not financial advice. So with that being said, I hope you have enjoyed this video. Please do leave a like and subscribe. It would be greatly appreciated, and I'll see you for the next video.